Good afternoon, everybody, and welcome to this edition of Ask the Experts for Tuesday, 7 June. My name is Carl Capaligo. I'm the market analyst over here at Think Markets Australia, and it is a pleasure to be with you as we unlock the secrets of your portfolio, lay them bare, and hopefully find some stocks to buy, find some stocks to hold, and maybe even some stocks to get rid of. Get your questions rolling in, and I will attempt to do my best at a technical and fundamental reader. Michael was first in today, and he's got TER. I should mention just on screen very quickly, the chart of Horizon just happened to be the one I was looking at before the session started. Very nice chart indeed, one I have been tweeting about quite a bit over the last few months, and you can see why. I mean, it's just a beautiful trend. Bottom left, top right, they are producing oil in a sort of a 26% interest, I think they've got, in a producing field in China, and then they've got some other stuff they own in New Zealand, but very interesting chart there. Happy to hold that one, and I can't really see any reason why you wouldn't buy it, to be honest, but that one looks pretty good. So a little bit of an insert there on Horizon, only because it was the one on screen. Terracom is one I've also been tweeting about like crazy, and I'm sure many of you are on it. And I think to this point, and I know up until this point, I have not said that we need to manage our exit. I've been pretty consistent on this one, and that is hold, and that's great because we started looking at it probably from around about the 30s. So to get it into 95 or just about 95 cents yesterday is great. I mean, it's hopefully you've done well out of it. The question is, of course, what do we do now? Is today's candle, which is still live, a supply event, something we need to take note of and take some profits on? It's not a great candle, let's face it. I mean, coming off yesterday's lows, it's not just the fact it's a black candle. So obviously, we've opened here at 90, we've had a low of 84, currently trading around 85. So it's not just the black, it's what we're missing at the top here, and that's part of, if we blended those two candles together, what would be a really substantial inverted hammers. Some people call them pin bars, dojis, but it would look a lot like this. And if I fill this one, and what we'll actually have is it'll probably try to draw this one to scale, probably look something like that. So if I was to blend these two candles together, the white one and the black one at the high, I would get something that looks like this, which is pretty substantial. High of 94.5, combined low of 84.5. The combined open there would be on that day of 86, and then the close at 85. Is that enough of a supply event? Geez, I think it's starting to get close. I would have liked to see it push a little bit closer into the $1 round number, and then I would have said absolutely that candle and that round number is compulsory, take profits, right? It didn't quite get there. But yeah, look, I'm going to go with, you wouldn't sell your whole stash here. I don't think there's any reason to do that. I think it's got such a great trend here, both in the short term and the long term, and we should expect pullbacks within that trend. So it would have to be a really substantial supply side candle to get us to push us out of our entire position. Let me say this, look, if you're jittery, the fact that we have that pretty nasty candle and the proximity to $1, I think you can take a little bit of profit, but I would still like to keep some skin in the game on the basis of that wonderful trend. Apart from that, I don't think there's a whole lot to say. I mean, the price action still looks good. Candles are predominantly white, so I don't think you need to panic too much. That one was for Michael. In terms of the fundamentals, I'll see if I can get something for you. I did do this one on the call a little while ago, and there was a very small amount of broker coverage there. And I did some back of the envelope estimations myself. No, there we go. And I came up with a valuation of $1.20. So that also would give you a little bit of comfort that maybe if we can deal with this $1 round number, there is potential more in it. But to be fair, if we started around 35, 40, wherever it was when we started looking at it, you're closer to potentially that valuation than we were at the beginning there. Next one is for Anthony, and Anthony is asking about AGE. Let's have a look at this one. It looks okay. I mean, it's a big difference, isn't it, between this chart and the last chart? And again, a lot of today's session is about tuning your eyes in to what we want to see. And certainly there is a long-term trend in place. The short-term trend, unfortunately, is well established now, I think, to the downside, and that is a problem because in the uptrends you tend to find that the short-term trend zone supports prices, but in the downtrend, and we haven't seen this bona fide downtrend really this year. We haven't seen it sort of since since back in late 2021, tends to push prices down. Having said that, didn't do it for very long, did it, over here? But the concern is with the candles looking the way they are, three black candles in a row, we're at a bit of a risk of maybe pushing a little bit lower. That low there is the key now. I think 6.1. I don't want to see it trade below that. Certainly not below 6. I'd be really concerned if it got below that. That way we are in this phase where we are really changing this long-term trend, and this long-term trend zone, which has been so reliable in the past at providing a support area for prices, this dynamic support, unfortunately could start to act as an area of dynamic resistance going forward. So I think we're a little bit precariously placed here on Alligator. If you don't know what Alligator does, it's one of those uranium plays. And I did do an article on the website on the uranium sector in general, and actually specifically covering Alligator and where it's currently doing its operations. I'm pretty sure it's in the Northern Territory, so definitely catch that article on the website for more information. But the technicals here, I'm a little bit concerned. So now, what would make it better? And I was trying to give you the two scenarios: what would be worse and what would be better. If we see it move back into this higher peaks and higher troughs, what we call this good price action, I think that would be good. And in that case, a move above 7.4, so trading or closing 7.5 or better, I think would be positive. I wish I could give you, a definitive answer one way or the other, but clearly, with the short-term trend where it is and the long-term trend where it is one of those 50-50 bets, isn't it? I can't see the future, unfortunately. I can't tell you what's going to happen. All I can tell you is that at the moment, we are finely balanced, aren't we, between demand and supply. I think that's what that chart tells you. We are finely balanced between demand and supply. Next one is for Roberto. He requests Ramsay Healthcare, which was subject of a takeover bid, and I can't remember all of the details of that bid and how it's progressing, whether it's still on or it's off, or whether we're going to get a lot higher price. So it's hard for me to comment on that. In terms of the chart, again, it's very skewed because of that. But if we were just looking at sort of the price action here, I think the price action is pretty much entrenched to the downside. So lower peaks and lower troughs in place. The candles aren't inspiring. I'm not seeing any major demand candles coming in around the short-term zone to tell me that it is potentially going to act as a dynamic support zone. Look, there's a couple of little lower shadows there, but hardly convincing. That would leave me concerned, I think, that we may just gradually ebb down potentially to that long-term zone, which is probably going to catch up into the low 70s. There is going to be some support, I think, coming in here. So the old previous point of supply potentially acting as a point of demand. And we can see that there's a confluence of potential demand factors here, aren't we? Sort of around that 72 to 74 zone. Buy, hold or sell on this. I think the key question here is whether I'd buy it. And to answer that, I can say with absolute confidence is no, I wouldn't buy it based upon the signs that I can see on screen at the moment. Given the takeover bid is in place, I might just skip the fundamentals on that one. This one is from Chris, and he's asking for Bellavista, which I haven't heard of. Let me go into a different list here and see if I can find not Bravura Solutions, but BVR, which is there. And I can see why, Chris, I don't have it in my main list yet, because it looks like it's a very recent listing. So my main list will have stocks in it that I can get at least my short-term trend on. And you can see I'm not printing any short-term trend here, so I haven't had the minimum number of periods. For that reason, it's very hard for me to comment on the technicals. Guessing there are no valuation metrics I'm going to get on this one, because it probably doesn't have broker coverage at this stage, looking at the resources part of its name. Look, what I can say, given the 2, 4, 6, 8, 10 candles I have, grand total of 10 candles, it looks pretty strong so far. I mean, I got a bit of a shadow there, but made up for it here. Blend those two candles together. It's a very solid demand side candle, opening almost at its low and then really bouncing off the low anyway and closing at or near its highs there on that 2 bar. And then this is just chop. Really. So look, I think it's okay. I can't give you buy, hold or sell on that one, but suggest that the demand supply dynamics are skewed towards the demand side at this stage. Thank you, Chris. Next one is for Tesh, saying, hi Carl, hope you're well. I'm well, thanks Tesh, thanks for asking. And Tesh has a position in AD8, which is a fascinating chart. I'm glad I actually got this one today. Would like to add more. What would be a good price to add? do I think it will pull back to 630? And I think that's probably, Tesh, the way you want to look at this now. I think we're probably looking to buy the dip now, and I think that the recent price action is excellent. I think it really is demonstrating buy the dip. And if we have a look at, say, this candle here, which lo and behold, right smack bang on at this round number of $5. And I'm going to look back now and I'm going to see where the high was. And I'm guessing, it's just a guess, it was probably somewhere around $10 that we had some issues. It turns out it was about 11. So $5, great logical place for it to occur. I reckon I'm going to zoom out. I'm probably going to find some, there you go. I'm probably going to find an area where this was significant demand in the past. And it was, look at that. So straight away we can see that this is a logical point where buyers who are waiting to buy the dip will come in and act in the market, and their demand will interact with the supply. And was there lots of supply in the market? Absolutely. I mean, there was a substantial amount of supply in the market, but we hit some demand there, and to be fair, have overwhelmed the supply in many senses. I'm saying that supply is probably out of the market now. I'm looking for, next thing I'm going to look at to confirm that is, sort of this evidence of blow off. A blow off low, so people who are selling finally capitulating and getting that order completed, and demand coming in to soak it up. I would have preferred if that square lined up with that low. It didn't, but there was a bit of an influx here, which is not terrible. And then we typically see, if that supply is over, we should see volume really decrease over the next couple of weeks, and hopefully then we get a little bit of a push, and I wouldn't call that enough, but it's something of a push to the upside, indicating any sort of supply removal of deadwood in the system. So we're going to have lots of people that thought it was cheap at 8, because let's face it, lots of talking heads out there say that this is the best stock ever, and it's a portfolio stock, and it's a forever stock, and things like that. Those people don't tend to read charts, so that people who follow them at 8 probably regret that decision at 7. And people who bought in 7 probably regret that decision at 6. So you have some people that are just waiting to get out on this one, unfortunately, and they can create supply in the system. It's why we need to see a little bit of a push again to remove some of that supply to make sure that this rally is sustainable. But the fact that the volume declined here indicates that supply order, that motivated order to sell, whichever broker was managing that order, I think they're out of the market. So a couple of other good things. This candle here, when we get this demand side candle, look at that beautiful lower shadow. The market started poorly on the day. In fact, even that first one, this is so important. We're going to spend a little bit of time on this, because this is how you make lows in the market. So we can talk about Zip, and we can talk about a bunch of the other ones we talked about last week, which was saying, look, is that the low? I mean, huge declines, is at the low. This is how you make a low. So this day here started off terribly. It was a big black candle, but by the end of the day, the demand had come in. Small candle here, indicating that supply didn't have too much of an impact on the next day. And then this beautiful candle coming in again, potential panic in the morning, but just the demand holding strong now. So setting that floor, that concrete base now to work off. We come up through here, again, white candles are nice, very small black candles in response, really impressive. And then this beautiful candle here, and this is just fantastic, just to confirm this low. So, this double bottom here with the 2 lower shadows, and then that confirming candle is just wonderful. And then look at the reaction of the supply side. They really didn't have a whole lot, and in fact demand was just very strong. And then you get this one. It's just beautiful. Just wonderful. It's fantastic. Okay, so we've got a great low in place for Tesh. Now the question, Tesh, is, well, where's the supply going to come in? You can see this zone through here is where there are a few buyers got in. A few people thinking, well, that's the low, and again, because potentially this point of demand where they got in, that represents break even for some of these traders. Not all of them are going to think like that, right? But it is break even for some of them. Some of them will look to supply in here and try and undo that mistake. Others will hold on, no doubt. And the question now is, okay, how does we know demand's there? We know something's going on. How does it respond to this supply? And if we see a bunch of white candles in here, in this zone, then it's telling us that demand doesn't care about the supply. In fact, the supply is actually not as bad as we thought. But if we see a bunch of these black candles come in here, then I'm going to start to think, well, maybe supply was just waiting for better prices. So something like that, like these guys here, and there's plenty of black candles in there. But if we start to see those in here, then I'd grow a little bit more concerned. Your question is quite specific. It's asking about, well, where can I look for a pullback point? And I would then be looking at something sort of along here. If we do get a little bit of supply from this reaction in here, 630, I think is a little bit optimistic, because this dynamic support zone is going to track higher, and it might end up being 650, but probably more like 675 even might be your eventual zone. And to do that, I wouldn't just say, okay, well, 675, Carl said, might be the zone I'm going to buy as soon as it gets there. Now, I think you want to wait and see. You want to have a look and see how the candles develop in here. And it's not the black ones we want to see there. It's more of these white ones. So you want to see candle 1, candle 2, and if we call this one candle 3. Just perfect examples of what we want to see in and around this zone. It could be 675, 680, and that for me would swing it back to an unequivocal buy, I think, here. And I know that long-term dynamic zone, we haven't even mentioned this, have we? This elephant in the room that is just sitting here potentially pushing down prices, because we know in uptrends how well it supports prices, but the concern here is that it could be a weight on prices. So this is the level. I wouldn't buy it here. Why wouldn't I buy it here? As wonderful as the things I've had to say about this rally is because of these uncertainties. Okay, this point of demand potentially acting as a point of supply in that dynamic long-term trend zone. Let's watch the candles. Let's see how they progress. If we do get a pullback, then I'm looking at this area here and some white candles potentially to upgrade this to one of those turnaround plays that I do like to participate in. So Tesh, thanks for that chart. It is absolutely fascinating, and again, it's one of those fantastic case studies. As we go through Ask the Experts each Tuesday, write this down and just have this in your repertoire. Print out the chart if you have to. Keep a scrapbook of things that you want to look at. Next one that we're going to do is for Michael, and this is pretty neat as well. Michael wants to do a US stock, so it's got Microsoft. Now I don't have all my bells and whistles and my drawing tools on here because simply I don't use this as much. I'm guessing that's going to draw me a line somewhere. Good. Okay. So this is the problem for Microsoft, and much like we talked about the dynamic resistance potentially from that long-term trend zone on Audinate, potentially we've got some dynamic resistance here from this short-term trend zone around that sort of 270 level. But we're looking at how the candles respond there. We've got some crazy candles here. That white one is incredible. I mean, that's surreal. This candle here, to gap down the way it did and then close at the high, it almost looks manufactured to me. It almost looks, it's surreal. It's nonsensical. But following that up, we do actually have some supply coming in. And for me, I think the risk, I wish I could draw an arrow, brush highlighter, curve path. Gosh. Anyway, let me just show you. I think the risk is here potentially a continuation of this changing long-term trend. And I do think the long-term trend is now down. And charts of Apple, let's just have a look at them while we're here. Looking pretty similar, dropping out of this short-term trend, something like, say, an Amazon. Getting above that zone, look, that's encouraging. Last night's candle, not great. Google, and what I'm doing here is just giving you an idea of what we might be expecting for the NASDAQ. Apple, Microsoft, interestingly looking weaker. Amazon, Google, maybe looking a little bit stronger there. And let's just finish off with that one. I know it's a crowd favourite. This one looking pretty weak, I'd say. Yeah, the fact that it had, again, this surreal candle, it's almost manufactured candle, and then straight back down below the low of that candle is so unusual, but I think does speak to the latent supply in the system there. So not looking great in some of those big US tech charts. Buy, hold, sell on Microsoft. Michael, I can't be a buyer on that one, and I don't think I'm even a holder, to be honest. Let's head back to Aussie stocks, and same league, isn't it? Really, same league. Brainchip, why not? Tech stock. I can hear David chuckling from here. Not quite the same league, unfortunately. As good as the old Brainchip looked not that long ago, we've had a little bit of a wipeout here, and I think it's just going to take more time. Buy, hold, or sell. I can't tell you to buy this one. I can't tell you to buy this one because it's general advice, of course. I can't tell you to do anything, but looking at the chart, doing technical analysis and telling you what I would do, I can't be a buyer here on that basis. Could I hold it? I think with Brainchip, I think you're in the camp of, a long-term hodler to see where it goes or not. So probably nothing I'll say about it is going to change your mind. Is it a straight up sell? As long as it's holding that long-term trend zone, probably not. Although I don't have any great news for you on Brainchip, and you can head to the website and read their various announcements of how they're going at commercialising their Akita chip. But in terms of what the market thinks, sentiment, it's not looking great. It's not looking great. We're back to lower peaks and lower troughs. Again, this is just what the market's thinking. Back to lower peaks and lower troughs, and if if the market was loving this right now, it wouldn't be doing that. It'd be high peaks, high troughs. We're back to almost unanimously black candles. We should be seeing white candles. There wasn't much of a signal to tell you in advance that it was going to turn out this way. So for example, on this day, it's hardly anything to be concerned about. And everything through here, I think, looks good. But when you get to this day here, sometimes you've got to just, put your emotions aside and put what you think the company can do aside and say, well, that is a juicy big supply signal. And that would mean I would lighten the load. And look, it almost engulfed this day here. And then even if you didn't think that that was a bad day, a bad enough day, then this one here pretty much confirms it closing on the low. So, it's a manage your exit type of event really there, isn't it? Wish I had better news for you on that one, David. And you can tell from the disappointment in my voice that I did want that one to do better. MRM from King makes me happy because this one is still fine and it should continue to do so. There's absolutely nothing in there to suggest that the trend is about to turn. I know there's a little bit of a black candle here, and you probably say, well, hey, there wasn't much of an indication on that BRN chart either, Carl. But, well, there was. Those two candles came in until I see something really devastating to the demand side, really reinforcing of the supply side. I have to say that this one looks fantastic. Short-term trend, very much well entrenched. Price action looks good. With predominantly white candles there. Long-term trend looks great. We took out this level here, and we seem to be just hovering above it, so it doesn't seem to be a problem. The volume looks pretty good there. Equates to supply removal. We talk often in these sessions about supply removal. What does it look like? Well, it's an influx of demand at a previous point of supply. It makes sense. That's how we remove that supply. The only way to get rid of the potential supply here is to trade with them. And when we hold up there after that event, I think that's very positive. If you don't know what these guys do, it's some really big boats, basically, that service the energy sector and some other things as well, not just energy, but wind farms. They put up wind farms at sea and things like that. A very interesting company, and I think that chart looks very, very good. I wonder if we're going to have, let's check this out, we might even get some fundamental valuation metrics here on MRM. So if you don't know what we're looking at Thomson Reuters Refinitiv Icon product, and it grabs broker consensus estimates, but also historical data as well. So historical data up to that point, and then broker consensus estimates thereon. And we only have one broker covering this one, and Thomson Reuters doesn't tell us who it is, but they are at a strong buy. They have a price target of 76 cents, which leaves about 13% upside from the current price. In terms of the reason why this is not working, it's because it says no GR stands for no growth rate, because basically earnings per share at the moment is negative, but expected to improve though into the positive column. So if I change that, we get some crazy growth rates because we go from 0.4 of 1 cent to 2.9 cents. Yes, so the growth rate is astronomical. So I'm probably not going to get any sensible valuations here on this one. But look, if there's any value in it for you, King, you can see that there is a broker out there who has a strong buy and a 13% upside target on that. Okay, heading on to the next one, which is for William. Hello, William. William's asking for Allkem AKE, which is still okay, and fingers crossed it stays that way. This is a great trend, and as we know, I know I'm like a broken record, but we know that the trends are your friend until they bend and they end. What does a bending, ending trend look like? Let's have a look at one. Okay, this is the one I always go to, isn't it? Novonics, for what a bending, ending trend looks like. And we can see it starts with these devastating supply events, which really damage the demand side and reinforce the supply side. So something like that. We can see short-term trend interactions that end up failing, and then long-term trend interactions that end up failing, and then down we go. So Allkem, touch wood, is not doing any of those horrible things just yet, apart from maybe this one here. This is concerning for me. Now, this was that Goldman Sachs report that they put out saying that lithium prices have probably peaked and probably will be significantly lower, say in 12 months' time. But what an impact it had on so many stocks we were watching. And it's created, unfortunately, a bunch of candles that have messed up a bunch of charts. So for me, I'm very concerned by that supply event and the lack of response. So I've heard many times now in the media from experts saying that it's a buying opportunity, that it doesn't mean so much in the long-term picture. And I think opinions are great, but I prefer to look at the market response. And the market response isn't by the dip. Let's face it, look at those candles. Let me get rid of all this stuff. Look at these candles. I mean, is that by the dip? Is that, experts talk, but do experts buy? I don't know. Because if they think it's such a great buy, they would have been telling their clients or buying on their own funds' behalf. And we should have seen a far stronger demand-side response. So the fact we haven't seen that demand-side response after that huge decline is concerning. But as long as we continue to maintain this uptrend zone, I think I can call it a hold. I can't call this a buy like those experts because the evidence is just not there. What would be the evidence for a buy? Well, given we've seen such a muted response so far, I think you need to be really strict now if you're looking to get into it. And I think you have to demand price action with high peaks and higher troughs. I think you need to demand some candles that looked like it did when we looked at this a few weeks ago and we said, hey, I really like these candles and this price action. We looked at it probably here on a Tuesday and said, this looks really promising because it's bouncing off here and it's doing all the right things. We didn't know. I didn't know. Did you know that Goldman Sachs was going to make those comments? And there were some issues in Argentina with price caps and things like that as well, which probably didn't help on the same day. But we need to see these candles coming in, preferably around here, okay, and the high peaks and the high troughs, and then probably not until it could be 1250 on the way back up that I have the confidence that we are holding this zone, that we're holding this trend and this trend is intact. Now that's your best case scenario, right, for a buy. What is the worst case scenario for potentially, heeding the market's message, taking the cue and not being so stubborn about us thinking the lithium miracle is going to go on for the next 20 years. If it starts to do this sort of stuff, I'm getting really concerned. If it starts to interact like we saw, Novonix and so many others in this zone for a prolonged period of time without getting out of it nice and quick with some nice white candles, I'd be really concerned. If it broke beneath that zone, I'd be really concerned. Okay, so this one is on watch for me. I think you need to be really careful. But thank you for putting that forward, William, because it helps you make some hopefully informative points for you. Next one is CXL, Calix, which hands down one of my favourite charts, from past 12 to 18 months. I'm concerned now. I'm looking at this and I'm starting to see that cluster of black candles. I'm seeing the price action changing. I'm also concerned about, well, I was going to say $10 proximity. Look, let's face it, that was weighing on the market, that proximity to $10. And then I'm looking at this shadow, I'm looking at these candles here, and I don't like them. And I'm looking at the fact that this all happened in and around that zone there, and I don't like that either. I'm quite concerned that this one is changing trend, okay? So if you haven't already started to manage your exit, that's the way I feel about this one. Potentially keeping a bit of skin in the game on the basis that this long-term trend has been so reliable. But I would suggest it's going to take quite a bit of time to deal with this level, to put it in around and trade with it, and then potentially head back up. And if you were to sell some here, I don't think you'd be too unhappy if you waited a month and then had to buy it back a little bit higher, because you were seeing the signs that demand is actually coming back in to buy this dip. At the moment, it just smacks of sell the rally to me. So I'm a little bit concerned about Calix. Okay, and Allkem. They're pretty much in the same boat, aren't they? That one was for Therese. I wish I had better news for you, Therese. Next one's from Sam. And he is asking, assuming Sam is a he, it could be a she, I don't know. MP1. Sam, if you're new to my Ask the Experts, when I make that noise, it's not good. And I could probably just make that noise and move on. But it does provide us with some cautionary tales. Now, Megaport, one of the heroes of before the NASDAQ died on us, isn't really around there. November 22, the NASDAQ turned. You can see how we went from loving high PE stocks to just about hating them. I can't see any redeeming features. It's just doing all the stuff that we hope Calix doesn't do. Is this Calix 6 months from now, where we're seeing those signs of building supply, of black candles, of short-term trends changing, of struggling to bounce off the long-term zone, and then that long-term zone really now acting as resistance and pushing prices down, breaking of support, points of demand, and just step-down pattern. There's no redeeming features here, and unless you're asking me about whether this one's a short, Sam, which it probably is a short, I can't give you any other encouragement on this one. The last bastion of demand potentially is here. Ooh, at least we are there. At least we're there now. Oh, no, we're kind of beneath it. What is that low there? What is that low? And are we beneath it? Let's have a look. That low there is 6.11, and I fear, yeah, we are. We're beneath that. I'm sorry, Sam, but that looks awful. What I'll do for you, though, Sam, is I'll try and maybe give you some sort of hope here. Now, I have looked at this a few times on the call, and every time I looked at it, it wasn't making money, and it didn't look like it was going to make money anytime soon. And that hasn't really changed, funnily enough. Here we go, still not making money, and then by 2024, and we're trading on approximately 37 times 2024 earnings, which actually isn't that bad, But I reckon at the highs, that might have been 100 times, and I think I was on the call and I would have said something to you like, well, the chart looks good, but geez, it's expensive. Well, it doesn't look that expensive for what it's going to be making, especially at 15 times FY25 earnings, but there's execution risk between now and us getting there. It's going to be hard for me to value because those earnings are so far out, but I can try. I can try for you. Let's have a look at their earnings per share. 150% per annum. Well, I would say that's pretty lofty, and there's a pretty high risk it won't achieve that. So let's run with that. It just changes the discount rate. What would I be prepared to pay for a stock that has that sort of earnings potential and reasonable valuation, to be fair? Look, I think 26 is fine. I'd actually probably pay a little bit more for that. So let's leave it at that. You could go low. You could say, oh, well, I'll never. I bang the desk. I'll never pay more than 20 times earnings. Okay, and if that's the case, then it's probably still overvalued. And don't forget, there will be funds out there that will bang the desk and say, I'll never pay more than 20 times earnings for a company, regardless of growth. And maybe that's why we're heading down here, and potentially, 582 is the valuation there. Now, look, I think for a company like this, 26 times is pretty reasonable. So for me, anyway, I think it's starting to look a little bit cheap. I think these are ridiculous. I think the broker's mean targets of 15, 16 are absurd. And you just find that the way the broker upgrade cycle works is on the way up. Look, 11 estimates. And this is where you have to be really careful with broker estimates. They upgrade as the price goes up because they don't want to look silly and behind the curve. But then, unfortunately, they don't want to downgrade their prices because that will make them look silly. Basically, they're wrong. They'd be wrong, and they don't look wrong. So they end up with these crazy prices that get stuck up there. And you get these silly numbers here, like 140% upside. Funnily enough, these brokers are still calling it a buy. They probably told you to buy it all the way up to the top anyway. 2 buys, 5 buys, 4 holds. But I think that's all the information you probably need there, Sam, to make a call on that one. Let's have a look at HVST, which is an ETF, HVST. I'm guessing it's something to do with, I was going to say something to do with agricultural commodities, Errol, but it's not. It's a dividend harvest. I wish it had something to do with agricultural commodities because that would make it very interesting. This one looks very boring. It's a dividend harvest, so I'm guessing they're harvesting dividends from your banks and your insurance companies and things like that. It doesn't look good. I mean, it's hard to do technical analysis on an ETF like this. You're better off maybe looking at some of the banks and things like that, but that doesn't look great. I mean, if that was a chart straight out, hands down, personally, I would sell it. A stock chart. So let me tell you, Errol, if this was a stock that I owned, I'd be out in a heartbeat because the trends have really changed. We've gone from that uptrend, that transition that potentially, we hope not, but Allkem and Calix and some of those high flyers have done. It's all resistance, all black candles, it's all heading down. So I wouldn't be an owner of this one, Errol, just from me. Now, that's from a technical analysis perspective. I can't tell you what the dividend yield is. And Errol, you might be just wanting a yield and don't care about capital stability. That's your business, okay? But for me, I'm a growth investor, so it wouldn't be one ordinarily that I'd be drawn to. What I will do for you, Errol, if just very quickly, because I know a bunch of people are interested in this, Commonwealth Bank, how does that look? And I'm sure people who have been with me for so long now, they've got trained eyes and they can look at that and say, well, Carl, it doesn't look bad, but it's not that exciting either, but it's probably a strong hold there. Let's do them alphabetically. ANZ, okay, well, there you go. There's your dividend harvester, isn't it? It looks like it's got a bunch of ANZ in there. That looks terrible. I haven't looked at the chart of ANZ for ages because it never comes up on my scans, and you can see why it hasn't come up on my scans for ages. That looks awful. What's next? Now, looks okay, but getting worse. I think this is changing trend. I think this is actually pretty concerning. Look at those black candles coming in there. That looks very shaky to me, but still in trend, but very shaky. The question is what it'll do here in this long-term trend zone. Do we get, say, this sort of a performance? And look how good this is. I mean, maybe not there, but pretty close. Look how solid My dynamic trend zone has been here, wonderful. So we're going to get a pretty good indication pretty soon on NAB. And then bring up the Ritter's Westpac, which looks a bit ho-hum, to be fair. It's very flat, isn't it? So, yeah, I wouldn't say the banking sector is getting me all that excited right now, Errol, and maybe that's why HVST is starting to look like it's about to drop off a cliff. But let's do PLS because it's, let's face it, crowd favourite. Now, or let's keep the scratchings for a second, because I'm going to say that the last time we looked at this one was just before that Goldman Sachs, and it was about here, and we're saying, okay, well, we're starting to see some signs that the long-term trend is holding. I might have said things like, well, candles aren't that impressive, but at least the price action is come back to the right direction, which is high peaks, high troughs. I had no idea Goldman Sachs was going to drop that bombshell on the whole lithium sector. So we kind of need to redo our analysis. But what we can say is stuff which we've always said, which is this is more and more looking like the trend is under some real pressure when you look at these supply events. In fact, they're happening at lower levels. We talked a lot today about this interaction and prolonged interaction with the long-term trend zone. We looked at the last one. We looked at what is it? NAB. Let's have a look at NAB. And we know that when these interactions are quick, we get the trend perpetuating really well. When these interactions start to be prolonged, it's generally a bad sign. And then the Goldman Sachs thing cracked it straight through, and we look at just the muted response, a very disappointing response. So again, for all those experts out there that said, oh, it's a buying opportunity, I can't see the market really proving that to me. I'm concerned about this one. I think this one, for all intents and purposes, has turned the trend. I think, whilst there were many opportunities, and we've talked about them in the past, to manage your exit through this, I would have drawn minus 1/3 all over this thing. That final third that you might have been holding on in hope that that this would pick up again, I think that's gone now. I think this has moved from a hold to a sell on Pilbara. That's my opinion on that one. Just my opinion. I don't want to upset anybody. I know people love their lithium stocks. It's like a religion to them. And I just call it as I see it. And I call it as I see it based upon the demand and supply in the system. Let's have a look at Pilbara Minerals, because we are going to get some earnings as of this year, which is wonderful. And then they are ramping up pretty well. And then potentially as brokers, and the brokers, there's just such pessimists, aren't they? As brokers pare back commodity price estimates into the future, they tend to do. We get this downturn here. But I don't think 14% is unrealistic. I mean, yeah, surely you can do 14% earnings growth over the next 3 years. I think on average that would be fine. So I'm going to go back to low on this one. Let's get the PE right. So what would you pay for a stock that's growing at 14% per annum? I think you probably pay more than 10. Oh, well, I don't know. This is up to you. What would you pay? Would you pay 15? Would you pay 15? I mean, that would be the top end of the range. And even then, it's still looking pretty expensive to me. So maybe the market just got ahead of itself. What do brokers think? Oh, well, I don't know. You can make your own mind up. 2 strong buys, 2 holds, and they've got a consensus of 340. Again, as the price went up, they ratcheted those targets up, and they tend to get a bit sticky there. My model is saying, well, unless you are prepared to pay 20, 25, 30 times earnings for Pilbara, and hey, if it was just going to be this, so if this was the growth, you'd pay 100 times earnings, wouldn't you? I mean, if this was growth, but the problem is this, and who's to say whether the brokers are right? They're wrong all the time. But if we take an average of 14%, it's not that unreasonable. You know what I mean? And would you pay 30? Would you pay 27? For it to be fair value just now? I don't know. What would you do? That's your business. Let's get to the next one. OPT. Opthea, which it was looking so good. This was one of my favourite turnaround plays because of these beautiful, wonderful candles here. I'm not sure what's happened. Maybe a news announcement. Frustrating. I'm going to just give it the benefit of the doubt and just hang on with a hold call here because it had got above that long-term trend. It was using it as a support zone. That short-term trend had changed and the candles were wonderful. Demand signals through here. Blow off low through here. Great basing pattern. I'm going to say there's just enough for me to give it the benefit of the doubt. As disappointing as this is, this is a big demand candle here. What's that low? I don't want to see it trade beneath that low. That low there, 106. Oh, maybe I could give it to $1, a 99, and I think you're going to have to take your lickings on this one, unfortunately. But enough in there just to hold it on the basis of, the demand that we have seen. And fingers crossed that one pops back up. Sorry for that one, Therese, because I did put out a few tweets on that one because I did think it looked good, but again, I can't see the future. I can tell you what demand and supply is doing, and all the evidence was suggesting that demand was swinging back into the market, and it may still be there. NC1, which is a spin out of MLX. This one's for Howie. Now, if it's a spin out, I might not get a lot of data. I don't have a lot of data, but there's certainly enough there for me to get a trend. Thanks, Howie, for joining. And I think it looks okay, not great. So I'm a little bit concerned here about the fact that supply appears to be building. Okay, how do I know supply is building? Well, if supply wasn't building, if demand was building, okay, this second peak here would be above that one. So supply is building. That's my opinion. Demand's not building. And then we broke beneath here, and these candles don't look great. And I think we're sort of moving into a sort of a lower peaks, lower troughs phase. What is helping as well, if I squint, there's a bit of a general sort of uptrend there. And there has been some interest in the past. I can go a hold. I don't think it's a sell. I can go a hold, but I can't call it a buy. What could upgrade this to a buy for me? Well, again, let's see some nice white candles come in. Let's see the price action swing back to high peaks, high troughs. And ideally even, let's see it maybe deal with this level with some nice confident white candles as well. Until then, yeah, look, I could swing a hold, but really swinging a hold rather than embracing it. Next one is for Anthony, SYR, and this one is not looking so good, unfortunately. Similar comments to the last one. I would have preferred to see a stronger performance, and I tell you what, it was looking great here, wasn't it? I mean, we've just seen just a general malaise, I think, in some of these resource stocks. That is concerning. That is super concerning. And then the way it's just trundling down, just limping, really, isn't it? Limping into this area of demand. And this is, I think, an important area of demand, is concerning as well. I don't want to see it trade really beneath 150, but you could give it the benefit of the doubt and say, well, let's see how it goes here. I'm kind of just swinging a hold on this one, but it looks like a bit of a long road ahead. Maybe it's just interest. Maybe it's just sentiment amongst your chat rooms, and a lot of people lost a lot of money very quickly, and to get fresh money coming back in to push these things back up and overcome the latent supply in the system from people wanting to get money out to pay for other losses and, I don't know, maybe to pay off their student loans potentially. Let's hope we didn't get to there. You know, it could be a long road ahead. We need a new high probably on the index, on the market. We need investor sentiment to switch and just to get these material stocks pumping again. That would be good for all of us. Next one is from Adam. Adam's asking for DRX. A little bit depressing today, isn't it? Hopefully this will get us more excited. No, it gets me excited. I think this is pretty neat. Today's candle's not great, but that's okay because this is so convincing. I think this is really impressive through here. And then it's probably just a matter of waiting for the right candles to buy a pullback. So Adam, I think if you've got this one, as much as it will probably pull back somewhere into this zone, I think you can stick with it. If you're absolutely panicked, partial exit, but no more than a partial exit, with a view to holding the rest on the basis that I do think we are starting a new uptrend here. And if I zoom out, there's nothing really on the weekly chart to hold this one down. So this one looks really interesting. I can't call it a buy today simply because today's candle looks pretty nasty. But having said that, today's candle is live, and you have to remember, and this happens to me every time I do Ask the Experts, I comment on a live candle and I give you my best guess based upon a live candle, and by the end of the day, the candle can change. Okay, so understand that my comments, there you go, it got worse. You see that? It actually got worse. I did an update. You can see the update coming through, which I get on an hourly basis. So again, understand that these comments are made with live candles, and then you know what to look for now. I'm giving you the education on how to look, or what to look for by the close of the candle. Look, more and more, this is probably looking like a partial profit, but somewhere in here, I think, is where you need to be looking for those bullish candles to tell us that short-term profit taking from all of this deadwood. Think about how much deadwood, how many people, they came in every day and they watched, they type in, you know what it's like, DRX, enter on your broking platform, and it's 2.4 cents, hasn't moved for the day, or it's plus 0.1, or it's down 0.1, and you're just wanting to be the hell out of this thing because it's been the worst stock you've had in your whole life. And then finally it pops up, and that's you're the one that gets out. So there's going to be this natural supply in the system from this. But then let's see where the demand regroups and comes back in. It's probably going to be in this 3 cent level and some nice candles in there. I'd actually be looking to buy it with some nice candles in there on the basis of this huge volume push here and the great candles before that. Probably some news. I don't know what the news is. To be honest, I don't care. It's a chart that interests me. It's a very interesting chart. Next one is from Tanya. Tanya is asking for US stocks. Walt Disney, absolutely. I always love looking at US stocks. DIS. Surely another widely held. Oh, okay. Again, Tanya, if you're holding, I don't know, I guess Disney, you might have a subscription service and we know what it does and all those things. But again, it's one thing to know what a stock does. It's nothing for it to be an investment case. It's another thing for the market to like it enough, as well as you, to be heading up, which is how you make money out of these things. So we can talk about trend change through here. I think, print this out, stick it on your wall and say, well, this is how trends change. Okay, this is how we go from magical uptrends, no pun intended, to horrific downtrends. This is it. I mean, literally print that out, stick it on your wall, and let that be a cautionary tale that when you get to this point here, right, when you get here, something is very wrong with your stock. That if you own it, right, there's something is very wrong. You need to be absolutely super cautious, because if this thing doesn't pick up real quick, it's probably going to do what Disney has done. So textbook, perfect. Okay, that's history. Couldn't have done anything about it, but now you know for next time. What do we do from here? Is it a buy? No, I don't think so. I can't call this a buy because I just think the psychology of the market is so well entrenched to sell the rally. So as the stock goes up, it's a better point to get out, not a better point to get in. So I'm pretty concerned. Long-term trends well established to the downside. What could change it? Well, it's not terrible. I mean, this is a decent low set in here. We've confirmed it here, some decent candles. And look, if we push back above this high here, which is about 112.70, call it 113, close above that. And it's going to start to look interesting for a potential limp back up to maybe the 128 level. I couldn't buy it until I see how it responds in there and how it deals with this long-term trend zone. Because if you take the exact opposite of this, right, that's what needs to happen now, a little bit like that Opthea chart. I know not a great example because it's coming down again, but it needs to do all of that work. And I'm happy to miss potentially $30 of the next bull market on this, which could be $100. Okay, but I can't take the pun on it here. I'm sorry. So if I had it, I can hold it on the basis that we have seen some signs that a low is in. If it closed beneath there, then you're going for another leg down. That would be very, very concerning. So hold on the basis that some good stuff is happening, but not a buy potentially for the foreseeable future. So much else needs to occur before I could call it a buy. And that's just me, because that's my style. I'm a trend follower, so I need an uptrend before I can buy. And that doesn't look like that's going to be an uptrend anytime soon. Let's go Neometals. Okay, wonderful, Neometals. And Doug, I'm sure, Doug, I know you've been listening to me long enough to know that you would have done some managing your exits through here, no doubt. And as much as I championed this one on the way up, to be fair, I did start to tell you to sell it around that $2, probably around here. I think now it's pretty close to cracking. And we just looked at that Disney chart. If Disney was the perfect case study for what happened and continued to happen, then this is another fantastic case study of what could potentially happen. It's doing exactly what Disney did, six months ago. I'm really concerned about this one, and I can't see any reason to own this right now. And now you say, Cole, it's going to be Europe's largest battery recycler in a few years, and everybody's going to be driving around in electric vehicles, and they'll have spent and et cetera, and whatever, maybe, I don't know, possibly. It's certainly something that is comforting. Those stories are comforting to me, but they're just stories. They're comforting stories on the way up when the trend is in place, but I couldn't care less about them when the trend is down, because it doesn't matter what I think. And I'm sorry, it doesn't matter what you think either. It seems nasty, doesn't it? It seems really nasty for me to say that, but all that matters is what the market thinks if you want to make money. And I think the market is thinking that they want to be somewhere else right now. Hey, if you were to sell here and to curse my name, right? Let's say some miracle occurred, right? I'm not using that word flippantly, because think about the white candle. All of a sudden, you'd have to see this huge influx of demand. Like, where is this demand? Where are they right now? And what are they doing? And what are they waiting for? But somehow, you'd have to see these almighty white candles pop in, right? I mean, but they're not keen to buy it today, are they? I mean, if they want to buy it, why aren't they buying it today? So let's say it did occur, right? And this happened, and we saw some demand come in. We saw it push through this level, which is the minimum, absolute minimum I'd need to see. So I need to see high peaks, high troughs. I need to see a bunch of white candles, lower shadows, holding this zone. And then I came on a Tuesday after telling you to, and again, general advice, I'm not telling you anything, but after suggesting to you that I would prefer to be out here on this one and say 40 cents, $1.20, maybe you got some out close to $2. Trade's done, move on, get on with your life, right? But after suggesting that 120 is probably time to get out, if it went back to 150 and I popped up on a Tuesday and said, actually, I think it's time to get in, you've got every reason to curse my name that you missed out on 30 cents of the trend. All right, and that's what we're talking about here, maybe 30 cents of a trend. And if it is going to be Europe's largest recycler and everybody's going to be driving cars and whatever, and it's going to be amazing, brilliant, and it's going to be $10, you missed out on 30 cents of the trend. But if you're going to hold on and continue to tell yourself those stories about how great it's going to be, what's the downside? Another company which I covered fairly recently, which I think's got great prospects, great fundamentals, is this one here, Dubber Corporation. And I think I was on the call on, I don't know, maybe somewhere around here. I said, look, it's a really interesting company. I think it probably was about $2, but I can't buy it because the trends have changed. And maybe Neometals is here. Maybe this is where Neometals is right now. How many times have you seen this exact chart play out just in our conversation today? And do you want to take the risk that Neometals does that? Because that's your risk, isn't it? Your risk is, if you hold on, your risk is Dubber style, company, which I think has got great outlook prospects, fraction of its former value. And Neometals, the risk is you hold on and endure that sort of a devastating loss, or your risk is you miss out on 30 cents to the upside. And I know I'm labouring on this, but ultimately that is your kind of call on any of these stocks you're struggling with right now. And I'm saying it now because I know there's probably a bunch of stocks we're all struggling with just simply because of market conditions. But what's your risk? Your risk is hold on and grind it into the dirt, or get ground into the dirt with it, or miss out on a bit to the upside because it proves to you that it should be in your portfolio. What's the greater risk, I wonder? Okay, cheery note. 3DP. Let's have a look at 3DP. We're nearly there. Thanks, Glenn. I could do this one very quickly. 3DP, a long-term downtrend, short-term downtrend. There is a glimmer of hope in that this is a reasonable push off that low on some interesting volume, but the response to that has not been great, and therefore I think we're still very much entrenched in this downtrend. So for me, I couldn't buy this stock. There's absolutely no reason for me to own this stock right now. As for holding it, I'm really finding it hard to come up with a reason why you would even hold this one as well. Okay, sorry for that one, Glenn. Next one is SFR, which Sandfire Resources, which, hey, is kind of doing some of that stuff that we demanded from Neometals, isn't it? Bunch of white candles coming in, lower shadows, hitting levels, holding levels, boosting through levels. Can't see anything on the volume. This is weird. There's nothing here really to suggest this should occur, but that's impressive dealing with this here. Can I buy this? This is probably one of the most inspirational charts I've seen, but I'm not sure if I'm a buyer just yet. Let me see how it interacts with this $6 level and this long-term trend zone. So if I can see a few white candles, another zone, if I see this zone, so if I see this occur here, then on the next move through 6, a close above 6, I could call it a buy. But as good as it has done and as encouraging this rally is, I think I just want to see a little bit more work. This supply point here, you can see some nasty candles in there where supply was in the system, so might sound like a little bit of a cop out because there's some good stuff happening, but I'm going to be conservative. And I think you can afford to be conservative in this market. Why not? Why not just demand more from your companies? AVR. Thanks, Ben, for that one. Now this looks very, very nice. So this, I can't see any reason why you would sell this one. I think this is a little bit of a nagging concern, but we talked a lot about points of supply. We talked about how devastating they can be on the demand side, but we're not seeing a lot of trepidation here at that point of supply, which would tell me people aren't supplying here. In fact, they're happy to demand. This is without a doubt the best chart we've seen today from memory. I can't remember a better one. I'm going to go buy on this one. I'd be happy to own this I think this looks good. And we talked about how things turn around and how they hold levels. This is how you hold an uptrend. We've seen so many examples today of how you fail in an uptrend. This is how you hold it. Look at that candle, look at that candle, look at these white candles, a little bit of a push there, demand removal, supply removal I should say, but with demand coming in. This is wonderful. Like, that's just amazing. Shallow pullback in here, holding the bottom of this candle and then pushing back up. It might scare people because it has run a long way in a short period of time. And I think that's really my only concern about it, is the fact that we are moving a little bit of ways, aren't we? We're a little bit of ways from where I like to buy, close to my light green zone. But it looks so good. And even if you do get a pullback, I think this one's got some legs in it. I think we're getting a bit of a pause only on the basis that there's a potential point of supply there. And again, we talk about getting out in stages, so 1/3, 1/3, 1/3. I think this is one you could easily get in stages. And as much as there might be a little bit of a pullback, I think you want to have some skin in the game if you don't already. So if you have it, 100% hold. I'm just so confident that it's a hold. I'm going to go partial buy, but not putting all your intended capital into this one just yet. And sell is not on the radar. There's no sell on the radar on this one. Thank you for that, Shambu. Look, thanks for joining me. Next week I'll be back, obviously, at 1 o'clock Eastern Standard Time. Tell your friends, get them to come along, get their questions answered as well. Everybody's welcome. Think Markets Australia, we are the good guys in the Australian broking industry. We have all the products you need to trade, both across shares, local shares, and CFDs as well. So you can trade things like indices, commodities, crypto, and you can go long and short. And going short might be a good strategy to start to learn more about in the current market. CHESS sponsored on your shares, low flat rate, 24/7 customer support, the best trading tools you can get. And of course, my analysis. Head to the website for more details. Open an account, you could be trading in minutes. If you are thinking about joining us, make sure you tell your client service representative that you watch me here on Ask the Experts, and we'll chuck in an extra 10 free trades to the offer we've got going at the moment. So 20 free trades to get you going. Head to the website for details or email that address. If you're already a client of ours, thanks for being with us, of course, and make sure you tell your friends to join us as well, because there'll be some great benefits for you in the process, but also they get what I believe is the best offering in the Australian market. Apart from that, if you're watching me on any of the social media platforms, please hit the subscribe button, hit the bell icon to be notified, and smash that like button to let us know you love what we're doing, so we'll continue to do it. Apart from that, it has been a pleasure chatting with you today. Hopefully you've learned lots. All the best for your trading. Till we catch up again. Bye-bye for now.